Well, joining us now from New York is Anthony Chan. He's the former Chief Economist at JP Chase. Good to have you on the program again, Anthony.
Glad to be here.
Now, China's economy has surged almost 5% compared with the same period last year. Surprising or expected?
I think it was expected. We know that the economy was doing well. We were looking at the monthly data, and of course, the quarter ended on a pretty strong note. You saw that retail sales coming in very, very strong. But when you look at that real GDP report, the thing that stands out is the fact that one of the weakest links in the Chinese economy was consumer spending. Obviously, the manufacturing sector was doing well. But when you look at the contribution of consumer spending, there was a swing of almost 4% from a negative contribution to a pretty solid positive contribution of consumption spending. That was pretty impressive.
Right. So apart from consumer spending, what else did China do right? Because many major economies are only now returning to pre-pandemic levels, but China is the first to show significant expansion.
Well, I think it's the same story all over the world. If you do the right thing with regard to controlling the virus, the economy will rebound. If somehow you slip in terms of controlling the virus, then the economy slows down. You just mentioned in your previous story that when they saw a few flare-ups, they tested 11 million people. You do things like that, it really takes care of the overall economy. And in terms of the other components of GDP, what I still see is that the export component is still solid and stable, but I'm impressed that China is pivoting towards relying more on the domestic economy to fuel or to support economic growth, and that's a very healthy development for China.
I'm glad you brought up the jump in exports, because the question is, can that be sustained long term, or do they really need to pivot more into the domestic spending?
I really think they have to continue to pivot into more domestic spending, part of that dual circulation strategy that President Xi Jinping has talked about many times. And the reason for that is, it is no secret that you're seeing the virus still causing some problems in Europe, causing problems in the United States. And so if they relied simply on net exports or just exports to basically support the economy, that could be a little bit of a problem in the short run. Longer term, I think the export situation is okay, because I think that as you enter 2021 with the entrance of vaccines and better therapeutics, the overall global economy will pick up. But I think it'll be touch and go as you go into the fourth calendar quarter. And yet, because of what China is doing, China will be the only major country, industrialized country, that will actually register positive economic growth. I'm looking for economic growth for China in the neighborhood of about 2%, or maybe even a little bit more compared to the United States. That will probably contract by about 4% this year. And of course, Europe will also contract its real GDP in 2020.
Anthony, very quickly, your predictions. Is the worst of China's economic woes in the rearview mirror?
Oh, I have no doubt that the worst of the slowdown that we saw in the first quarters in the rearview mirror. The only issue is that without a real recovery in the global economy, we've seen that most of the good news is behind China. So they'll continue to improve, but certainly not as much as they have from the first quarter to now.
Anthony Chan, thank you for your insight. Always good to speak with you.
My pleasure.